This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. What I'd like to do today is talk about MACD, and actually I'm going to use a specific trade setup to help me determine what is really going on in a market. So it gives you an idea of the price structure and what to expect by following this one signal. All right, so let's go ahead and get into this. I've got a chart, a daily chart of the XLK in place. And what I want to discuss is the pinch play. But what I want to explain is the typical pattern, sequence of patterns in the way things develop in many cases. So if we start on the left here, notice we've got divergence that's taking place off the low. A lot of times you will get a pinch play that follows divergence. It's normally the sequence of events will normally be divergence, then the pinch play, then we cross over the zero line and we can look for a couple other pinch plays. So in this case, we actually got two pinches here and here prior to crossing above the zero line inside the range, essentially, right? We get these early kind of reversal patterns. Now, if you're not going to have divergence in place, what will typically take place is we get a kind of a strong move, and a lot of times it'll be an undercut pattern. This was an undercut pattern as well, but it won't have divergence off the low, and then it'll power up and then give you a pinch play here. But in this case, we did have the divergence, and then we get a couple sequential in the range setups that I would be considered pinches. This is my favorite pinch play here, is the first cross of the zero line and a pullback towards support in this case after we cross the zero line. Also notice in this pinch, we have green DI crossing over and holding 25. That's the first time in this move. So you can get these little mini trading moves, but it starts to get a little bit more interesting for me when I get green DI to confirm. And then if you notice, we get one more here, and I wouldn't consider this a quality play in any sense of we can see the pinch developed here, but we didn't get two lower highs and the entry happened on a gap. So, but even if you're not playing it, like it's not a good signal, you want to count post zero line cross how many of these we had, because after that you should expect either a more complex corrective pattern or a reversal pattern to take place. Now in this case, we actually broke the trend line and we got a pinch right away. You can see the little pinch develop here, right? And this is the reversal. This is basically no divergence, but then we get the little pinch inside the trading range. And it's really, a lot of cases, it'll be the two in a reversal. So we get the little test, mini test, very quick, and then we get a move to the downside. Now, here again is the quality setup, in my opinion, where we get a rally to the upside. Unfortunately, again, it happened via a gap. But again, what we want to do is say, okay, we have this reversal pattern, pinch, and then we have one pinch play here. This actually could qualify as a potential pinch, but this was clearly another pinch. Again, gap up, gap down, not necessarily going to play it, but what it does for us is tell us whether we should be looking for a more complex correction or a reversal. And if you notice, we get divergence off the low. So we get this sequence of trend line break, test, with a pinch in before we get confirmation of reversal. Then we get the reversal through the zero line, pinch play. Now we get divergence going the other way. Okay, now we have this trend line break, and here's the two. The two is a sloppy pinch. Look at this gap down and then a pinch, but it did work to the upside. So that's pinch number one, and that was before we crossed the zero line. And then we had two really sloppy pinch plays here. Do you see that? pinch play with very little upside progression, but it's giving us a sense of what to expect. And then notice this gap up play is actually a divergent pinch. I would view this as very similar to what happened over here. This is the 2. The 2 in this case, so we break the trend line, we come back up, we test this high and overrun it with a gap, but then reverse very quickly. But that was definitely a downside pinch. And then we move to the downside and look at these 2 little minor pinches, not very high quality, and there was very little follow through, but it does give us a sense of where the market is right now. So we should be looking for a reversal. Now, there was no divergence off the bottom, and then we get our first pinch here. Now, this was a down day, but we didn't get 2 lower highs. I want to keep pointing these out, but this is the first cross of the 0 line. So what this is doing for me, whether I'm taking this trade or not, it's helping me track what is going on in this market. Here's another pinch play clearly here that shows this red bar and then moves up. Now, both of those had pretty nice follow through in them. The funny thing is, this is the one with the 2 lower highs, but it didn't really show up as a pinch here. That I didn't think was as good a trade. But a lot of times these pinches, I'm not saying that you're going to capitalize on these. What this is going to do for you is it's going to tell you when you have a pinch play and you recognize the follow through and you see it here, then after you get 2 of those post the 0 line reversal, you should be on the lookout for a more complex correction. Look at what we're getting now. So what should take place now? We get this pinch play. We should see, if this is turning back to the upside, we should get a pinch play that holds, right? And that would be the first one kind of in like a new trend here, breaking the downtrend line. So we're starting a new move. We should get a couple of these and then look for a complex correction. Now, I know there are times where we can get more than just 2. They can just keep happening over and over again. But generally speaking, you want to be on the lookout for this sequence, and that is a pinch play off the low, usually following a trend line break or divergence, and then we get post 0 line reversal, pinch play, okay? And then trend line break, pinch play inside the range essentially, and then we get pinch play as a part of the trend after the 0 line reversal, then look for a reversal. Look at our divergence. So we keep playing this pattern. Now, these are very, very weak, but they're telling us what is taking place in the market. So we want to be on the lookout for this, and then notice our divergent pinch as a sign that we're moving back down. And then again, you get these. So just keep following the bouncing ball in a way, right? I mean, and I thought this was a good example because it was sort of a trendless market on the bigger time frames, but on this time frame, it's giving us a really good sense of what's taking place. So track these as you're looking at it. Think, Linda Raschke kind of refers to this as bull flag, then complex correction. All right. Well, this is sort of like bull flag. That's what these pinches are. Okay. So you want to think in that type of concept when you're going through these, and it'll give you a really good feel so that you're not maybe taking a trade that's too late. Count these, and then you can do this in multiple time frames, and it'll give you a really good feel for when there might be a bigger picture reversal developing. So hopefully this makes sense, and just go ahead and start to follow these and see if it can't help you anticipate reversals and also anticipate when we're going to go through something a little bit different than a simple pullback. All right, go ahead and post any questions or comments. Thanks.